Hey everybody, Economic Ninja here. I hope you're doing. Let's do that again. Did I even catch that snap? Hey everybody, Economic Ninja. I hope you're doing well. Got a great story out of the hedge. I'm gonna link it below, and this is the culmination of events of economics professionals, economists being wrong. Weird. It's like I guess that degree didn't get them very far. Honestly, and I'm only saying that because they're not investors. They don't see the sea change. They probably don't have a lot of skin in the game. They're probably just investing in ETFs and funds with a money manager, thinking they're the bomb because they make a few $100,000 a year. So we're going to dive right into this. This is a good story, guys. This is what we've been talking about all years with these guys being wrong. But sorry, it's a little rainy, and I just thought it would be a great time to get a coffee. So I'm probably going to be airing this in the morning. So grab a cup of coffee at pause. Let's have a cup of coffee together. Mm. Oh, that's delightful. The Arabica beans from heaven. I hate Starbucks. All right, here we go. So Wall Street gives up on corporate profit outlooks. Wall Street is finally caving on its forecasts for corporate earnings for the next couple of years. We're just gonna give up. It's been a good run. We've been wrong a excellently perfect amount of times. I mean, literally, you couldn't make this up. So let's just take some time off and so our brains can rest. And hopefully we'll be given a Nobel Prize in economics, which they probably will because they give it to themselves. It says right here, for some investors, it's still short of a capitulation in sentiment that would signal battered equities are getting close to a bottom. Well, I mean, honestly, you should consider that because Kramer's telling you all this stuff to buy. So to me, in my mind, I just go do the opposite of what that bobblehead's doing and I sell. It says projections for 2023 earnings have fallen 6 straight weeks by 3% to $233 a share for the S&P 500 index, according to Bloomberg intelligence data. I don't know if there's a lot of intelligence there. For 2024, the consensus has tumbled even more steeply. It's dropping 19 consecutive weeks by about 6% since mid-June to 253 cents a share. Look, they got a fancy thing. See the blue line? It's like it's there, and then burr, burr. And that's exactly what it's doing. Those are technical terms, just burr, burr. Yeah, that's what they should be doing on CNBC. Investors say it's constructive that many analysts are steadily revising their view lower. It's very constructive. How about being right the first time? No, this is totally better. I love the surprise of being told I'm doing okay, the economy's doing okay, and then secretly behind the bushes, they change it. I love the surprises. Think about that. Think about that. This is investors say it's constructive. Hey guys, you're all investors. Is it constructive that all these analysts are deciding to review, put things lower? No, yeah, we said it was going to be here. Well, give me a few minutes, a few weeks, a month. Oh, you're not paying attention? It's down here now. That's really what's happening. But the news article says that investors say it's constructive. You can't make this crap up. It says, however, money managers like Dan I at Fort Pill Capital Group says the gloom needs to deepen further before the market fully prices in risk that Federal Reserve policy tightening will weaken the economy. Well, no duh, Fort Pill. Think about this. It doesn't take a rocket scientist, or maybe it does, because a rocket scientist might be smarter than throw out a guy. I know there's a rocket scientist somewhere who's gonna be like, I'm a rocket scientist. You are smarter than an economist. And it doesn't take a whole lot of brains to be able to go, wait a minute, interest rate 0. Mongo raised them to 5%. Economy do good. No, it's not like that. You see, because what happens when Mongo raises the reserve rate, the Federal Reserve interest rates to 5%, which they say they're going to, it actually stops things. And if, zero sales in the real estate market, by the way, follow Real Estate Ninja. Good looking dude. Just saying, just check him out. Hit the subscribe button because there's a lot of crap coming down the pike there. But when Mongo raises it to 5%, things are bad, and that actually affects corporate earnings. All right. Now, it says here, the S&P 500 earnings forecast for 2023 should be closer to $220 a share, almost 6% lower than the current consensus, he says. I'm going to be honest with you. I think it needs to be about 25% lower. But if you said something like that, even if you went into double digits, like 10% or above, the street would panic. And honestly, all they're trying to do is avoid everybody running down to their banks, screaming, yelling, taking all their money out, buying gold because they know that the Federal Reserve has lost it. But by and large, you are the 1%. Why? Because you are the only people in the room. You're literally 1 out of 100 people that understand that we are crashing right now. We're not waiting for the Federal Reserve to tell us, like one of these comments I got, if we were really crashing, the Federal Reserve would be the first to let us know. Are you a bot? I mean, seriously, like how dumb can people be? But in the last 2 years, pretty dumb. A lot of people. It says right here, earnings estimates getting slashed for 2023 is part of the bottoming process for the equity market, says the firm's chief investment officer. That is not true. Okay, that is absolutely not true. They're going to go much lower. All right, they're not bottoming. What's going to happen is panic's going to ensue. People are going to start to liquidate. You will have literally what's called a liquidation event minus 22. I don't know if you guys know what that is. Throw it down in the comment section. I just think about Preparation H now all of a sudden. All right, but the liquidation event happens, people sell, panic sell, and that's when you find your bottom. Just so you know, that's where you find it. If you don't got a mirror that can get every angle, you'll find your bottom real quick in that kind of event. It says now, another quote, progress has been made, but there's still more work to do before stocks can bottom. It's too optimistic to see earnings projections that high next year. Guys, I'm not going to read the rest of this crap. I'm going to leave that up to you guys. The reason why I say it is because they're giving up. Their economists are giving up because they're like, why try anymore? We're consistently wrong. People like the economic ninja. Who the heck is that dude? It's just a dude with a brock and a dream. But he's been right about lumber and real estate and all these other things. He was wrong about theta. I mean, he made money on theta, but geez, why did I sell my theta? Point being is this. The average Joe, like you and me, mano a mano, we get it. The economists, they went to school to learn one type of economics, and that's a type that makes fund managers and money market gurus and corporate hegemony, for lack of better terms, rich. That's it. They want to sell you their prepackaged crap, and that's the only thing they've learned in schools. That's what gets you there, I guess. I don't know. Is Wharton still teaching this stuff, or are they teaching the good stuff? Like how money was formed. Is anyone from Wharton? Did anyone graduated from Wharton School of Business? I want to know. Are they still are they teaching where money came from in the most basic fundamental economics courses there? I would love to know. Guys, I'm going to put this below. I think it's an amazing story. Why? Because I love it when people give up, the brainiacs, because it means the brainiacs aren't brainiacs. They're even worse than weathermen. And sorry to all the weathermen that I just offended right now, but at least you guys are trying to tell the future, like what's going on. Is it going to rain? Is it going to, what? It's raining in California? Never. All right, guys, that being said, the Economic Ninja is out.